What will the Fed do? The US banking crisis helped them. Nowadays, crypto money investors are smiling, and months later, Bitcoin, BTC, has exceeded $26,000 again. We last saw that the Bitcoin price was above $26,000 in June. In the intervening 9 months, there has been no chaos where the crypto markets have not been experienced. Bank bankruptcies represented the last leg of this. So what's the latest on the US banking crisis? US banking crisis. With the collapse of Silicon Valley Bank and Signature, customers are flocking to major US banks like JP Morgan and Citigroup to transfer money from smaller lenders. According to a report by the Financial Times, this is the biggest deposit shift in more than a decade. Leading lenders such as JP Morgan Chase, Bank of America and Citigroup have had to speed up the account opening process to meet demand. There are thousands of banks, large and small, in the country, but the bankruptcy of the 16th largest bank directs US citizens to the top 3 banks. According to the report, depositors prefer larger banking institutions, especially when their balances exceed the insured limit. The Federal Deposit Insurance Corporation, FDIC, provides $250,000 per depositor per insured bank for all types of account ownership. As an exception to the 3 bankrupt banks, this ceiling was lifted and a larger wave of banks was prevented from sinking hundreds of medium and small-sized banks. What will the Fed do? Following the recent troubles, the technology market expects the interest rate hike to pause. This is something that crypto money investors are also looking forward to. Goldman Sachs Group Incorporated economists no longer expect a rate hike from the Fed next week. According to the banking giant, the Federal Reserve is expected to end its policy tightening initiative after the Federal Reserve meeting ends on March 22. Meanwhile, Bloomberg, Nomura Holdings Inc. now thinks that rate cuts will begin. However, Mohamed Apabai, head of Asian trading strategy at Citigroup Global Markets, expects otherwise. Apabai told Bloomberg that experts do not see any systemic risk from the collapse of the SVB. There are a few banks that the markets are worried about. We think we've found a way, or a good way, to really measure it. This is called the Electronic Data Processing Framework. And it seems to have worked quite well in terms of identifying vulnerable institutions in the last 48 market hours. But the bigger ones are all solid, at least for now. On the other hand, will the Fed, which has been struggling to rein in inflation for more than 1 year, release inflation, which is still at 6%, and start lowering interest rates? This doesn't seem to make much sense, and excessive optimism in the market can lead to losses. Investors are cautious here.